You pay your taxes, every paycheck, automatically, like clockwork. Federal income tax, state income tax, Social Security, Medicare, FICA. Before you even see your money, before you make a single spending decision, the government takes its share. Then you open the news and see that a billionaire paid zero federal income tax last year. That Amazon reported $10 billion in profits and paid nothing. That a hedge fund manager worth $3 billion has a lower effective tax rate than his secretary. And you can't help thinking, how is that even possible? How is it legal? How am I paying 25 or 30% of everything I earn, while people with private jets and multiple homes pay nothing or close to nothing? Here's the truth most people never hear. The truth that's hidden under layers of complexity and technical language and deliberate obfuscation. They're not cheating the system. They're not breaking the law. They're not even bending the rules. They're using the system exactly as it was built, exactly as it was designed to work, exactly as the people who wrote the rules intended. And that's the real trap. Not that the rich broke the rules, but that they wrote them for themselves, in language so complex that most people can't understand it, with loopholes so specific that only the wealthy can use them, with benefits so targeted that ordinary workers never even know they exist. The tax code isn't broken. It's working perfectly. Just not for you. If you've ever looked at your paycheck and thought, how am I paying more in taxes than people with private jets? Drop a yes in the comments. Because millions of people feel the same way. And they're not crazy. They're seeing the system clearly for the first time. This is educational content, not tax, financial, or legal advice. Tax laws, deductions, and strategies vary significantly by jurisdiction, income level, and individual circumstances. Always consult a qualified tax professional before making decisions. Since 1960, the top marginal income tax rate in America has dropped from 91% to 37%. The corporate tax rate has been cut roughly in half over the same period. Capital gains rates, the tax on investment profits, have fallen dramatically. But payroll taxes? The ones that hit every dollar you earn from the first dollar to around $160,000? Those have increased. Social Security and Medicare taxes take 7.65% of your paycheck if you're an employee, 15.3% if you're self-employed. And unlike income taxes, there are almost no deductions, no loopholes, no way to structure around them. That means the system quietly flipped upside down over the past 60 years. The tax burden shifted, from the top to the middle, from wealth to wages, from people who own to people who work. People who work for money now pay a higher effective rate than people who make money work for them. That's not rhetoric. That's math. That's reality in the actual tax returns filed by real people. You earn wages. They earn wealth. You get taxed on every dollar you make before you even see it. They get taxed only when they choose to realize gains, and often they structure their lives so they never have to. That's not a glitch in the matrix. That's the matrix. That's the system functioning exactly as designed by the people who benefit most from it. Sound familiar? So how do they do it? How do the wealthiest people on the planet, people with more money than they could spend in 10 lifetimes, legally pay almost nothing in federal income tax? How is that possible when you're paying thousands or tens of thousands every year on a fraction of their wealth? The answer is simple once you see it. They don't earn income in the way you do. They build assets, and assets are taxed completely differently than wages. When you earn income from a job, the government takes its share before you even see the money. Withholding. Automatic. Unavoidable. You get your paycheck and the taxes are already gone. You never had a choice. You never had a chance to structure around it. When you build assets, when you own stock or real estate or businesses that appreciate in value, you decide if and when the government gets paid. Because appreciation isn't taxed until you sell, until you realize the gain, until you choose to take the profit. Imagine you own stock worth $10 million. It's grown from $1 million over the years. On paper, You've gained $9 million in wealth, but you haven't sold. You haven't realized the gain. So you owe zero tax on that $9 million. It just sits there, growing, compounding, making you wealthier every year, untaxed. Instead of selling it and paying capital gains tax, even at preferential rates of 15 or 20%, that would be $135 to $1.8 million in taxes you borrow against it. You take out a loan using the stock as collateral. Banks are happy to lend to you because you're wealthy and the loan is secured. You might borrow $5 million at low interest rates. You take that $5 million in loan proceeds and live off it. Buy a house. Fund your lifestyle. Invest in other things. And because it's a loan, it's not taxable income. Loans aren't income under the tax code. You owe nothing to the IRS. You live off borrowed money, tax-free, while your assets continue to appreciate, untaxed. And when you die, those assets pass to your heirs under the step-up in basis rule, which resets the cost basis to current market value and erases all the unrealized gains. Your heirs inherit $10 million in stock with zero built-in tax liability. The gain that accumulated over your lifetime is never taxed. Not to you, not to them, never. That's the billionaire's life hack. Buy, borrow, die. Live off debt. Die with assets. Pass it all on tax-free through basis step-up. Meanwhile, you're paying 25 or 30% off the top of every dollar you earn just for showing up to work. Just for trading your time and labor for money. Before you pay rent, before you buy groceries, before you have any choice in the matter. And here's the twist that makes it even more infuriating. They don't need to cheat to do this. They don't need to hide money offshore or use illegal tax shelters or commit fraud. It's perfectly legal, built into the tax code, approved by Congress, blessed by the IRS. Because the law says loans aren't income and unrealized gains aren't taxable, and basis steps up at death. The system was designed this way, on purpose, by people who benefit from it, for people who benefit from it. But it's not just about buy, borrow, die. It's not just about unrealized gains and loans. The entire structure of the tax code operates like a secret language that the wealthy speak fluently and you were never taught. You buy a laptop for work, $1,000. That comes out of your after-tax income. You earned maybe $1,400 pre-tax, paid $400 in taxes, and used the remaining $1,000 to buy the laptop. The full tax burden falls on you. They buy the same laptop. But it's a business expense, a deduction. If they're in the 37% tax bracket, that $1,000 deduction saves them $370 in taxes. The government effectively subsidizes $370 of their purchase. Their real cost is $630. You drive to your job. Gas, maintenance, insurance, depreciation on your car, all personal expenses. Paid with after-tax dollars. Not deductible. You absorb the full cost. They drive to a meeting, to visit a property, to meet a client. Same car, same gas. But it's a business expense. Deductible. The government subsidizes part of the cost through reduced taxes. You pay for dinner. That's spending. Personal consumption. After-tax dollars. No tax benefit. They pay for dinner with a client, with a business partner, with someone they're trying to close a deal with. It's business entertainment or marketing. 50% deductible in many cases, sometimes fully deductible. The government subsidizes their meal. Every single rule that limits you and constrains you and forces you to pay full price with after-tax dollars frees them. Every expense you pay in full, they get a discount on through the tax code. It's the same laptop, the same car, the same dinner. But the tax treatment is completely different based on who you are and how you structure your life. That's not fairness. That's not equality. That's a system designed to benefit people who own businesses and assets over people who just work for a living. And who wrote those rules? Who designed this system where every expense can be a deduction for business owners, but almost nothing is deductible for employees? Not you, not me, not ordinary workers or middle-class families trying to make ends meet. Lobbyists, corporate lawyers, accounting firms, trade associations, wealthy donors who fund political campaigns, people who literally drafted the language of tax code sections that apply to their industries, their businesses, their wealth. Real estate investors got depreciation, the ability to deduct the theoretical decline in value of a building even while the building is actually appreciating in market value. It's a paper loss that offsets real income, a loss that doesn't reflect economic reality but exists purely for tax purposes. Oil and gas companies got depletion allowances and intangible drilling cost deductions, special tax breaks that let them deduct costs faster and more completely than almost any other industry. Hedge fund managers got carried interest, the rule that lets them pay capital gains rates of 20% on what is functionally their salary for managing other people's money instead of ordinary income rates of 37%. Private equity firms got rules that let them load companies with debt, deduct the interest, extract wealth, and pay minimal tax on the gains. If you don't even know what those terms mean, depreciation, depletion, carried interest, basis step-up, that's the point. That's the protection. The complexity is intentional. The jargon is a barrier. The obscurity is the defense. While you're struggling to file your taxes correctly using TurboTax, hoping you don't miss a form or make a mistake that triggers an audit, they're using tax strategies designed by entire departments of CPAs and tax attorneys. Strategies with names. Strategies that are taught in advanced tax courses. Strategies that require wealth to implement because they only make sense at scale. You have TurboTax and a standard deduction. They have family offices and tax optimization plans and multi-jurisdictional structures. You're playing checkers with a pamphlet. They're playing 3D chess with a team of grandmasters. That's not because they're smarter. It's because the game was designed for them. But perhaps the most dangerous part of the tax trap isn't even what you pay. It's what you don't get back. It's the promise that was broken. The social contract that was quietly rewritten without your consent. You pay your taxes expecting something in return. Not directly, not transactionally, but collectively, as a society. You pay so there are good public schools, so roads get maintained, so there's a safety net if you lose your job or get sick, so the systems that make modern life possible continue functioning. But then you look around and see schools are underfunded, class sizes are huge, teachers are underpaid and buying supplies with their own money. Roads are crumbling, bridges are falling apart, infrastructure is rated D+ by engineers, healthcare is unaffordable, medical bankruptcy is common, the safety net has holes big enough to fall through. Social Security and Medicare are perpetually in crisis. And you wonder, where is the money going? I'm paying. My neighbors are paying. Everyone I know is paying. So where are the resources? Why does it feel like we're paying more and getting less? Because when the wealthiest individuals and the most profitable corporations structure their affairs to pay minimal tax, when they use the complexity of the code to reduce their obligations to nearly nothing, when they shift income and profits and wealth through legal mechanisms that workers can't access, the burden shifts. To you, to the middle class, to wage earners who can't hide income or defer gains or structure around obligations. The middle class fills the revenue gap left by the wealthy who opt out, and still gets less. Still sees underfunded schools and crumbling infrastructure and inadequate services. Because the gap is too large. The revenue shortfall is too big. The system can't provide what it promises when the people with the most contribute the least. Your taxes fund the system that lets them keep theirs. You pay so they don't have to. That's the trap. That's the transfer. Slow, invisible, normalized, from workers to asset holders, from the middle to the top, from you to them. And that's not sustainable. That's not a functioning social contract. That's extraction disguised as policy. Here's where we are now. You're working. You're paying taxes automatically on every dollar you earn. You're funding a system that doesn't serve you the way it promised. And you're watching people with vastly more wealth pay vastly less in tax, legally, openly, without consequence. And the response you often hear when you point this out is, "That's just how it works. That's capitalism. That's the free market. If you don't like it, work harder. Start a business. Get rich yourself." But that response misses the point entirely. The point isn't that wealth exists. The point is that the tax code is deliberately structured to tax wealth less than wages, to favor people who own over people who work, to advantage capital over labor. That's a policy choice, not a law of nature, not an inevitable feature of markets. A choice made by people in power, often influenced by people with wealth, embedded in thousands of pages of tax code that most people will never read. Have you ever calculated your effective tax rate and compared it to what billionaires pay? Drop your percentage in the comments. Because when you see the numbers side by side, when you see that you're paying 20 or 25 or 30% and someone worth billions pays 3% or 0, the inequality becomes undeniable. Still, the truth isn't just anger. It isn't just frustration at an unfair system. The truth is understanding. Because once you see how the game actually works, once you understand the mechanisms and the structures and the rules you were never taught, you can stop blaming yourself for losing at it. You can't win a game when you don't know the rules. When the other players have access to strategies you've never heard of. When the system is designed to favor them and burden you. But once you understand the rules, even partially, even imperfectly, you can start making different choices. Better choices. Choices that work within the system instead of just accepting whatever the system does to you. This isn't about tax evasion. This isn't about breaking the law or hiding income or doing anything illegal. This is about tax education, understanding what's legal, what's available, what you're allowed to do that nobody ever taught you. Here's what you can actually do within the bounds of the law. Not magic, not get-rich-quick schemes, not promises that you can pay zero tax like billionaires, but real strategies that can reduce your tax burden legally and meaningfully. This is information, not advice. Tax situations vary enormously by income, family status, location, and dozens of other factors. Always consult a qualified tax professional before implementing strategies. But here's what's worth understanding and exploring. First, stop thinking about taxes once a year at filing time. Start thinking about them monthly. Every financial decision you make, how you earn, how you spend, how you invest, how you structure your work, has tax implications. The wealthy think about taxes constantly. You should too. If you currently work only as a W-2 employee, consider starting some form of side income. Freelance work, consulting, a small online business, digital products. Doesn't have to be huge, doesn't have to replace your job. But once you have self-employment income, 1099 income, you're no longer just an employee. You're a business owner, even a small one. And business owners get access to deductions that employees don't. Your home office, your internet, your phone, your computer, relevant software and subscriptions, business mileage, professional development, certain meals and travel, equipment, supplies. None of this is illegal. It's all explicitly allowed by the tax code for people who have business income. But if you only have W-2 income, you can't take most of these deductions. The same expense, the same laptop, the same internet bill, is treated completely differently based on whether you're an employee or have business income. That's how the rich think. How do I structure my earnings as business income rather than wages? How do I turn personal expenses into business deductions? Not through fraud, through structure. Second, maximize tax-advantaged accounts. 401k, IRA, HSA, Roth IRA, 529 plans, FSA. These are boring acronyms with boring names, but they're legal ways to reduce your taxable income or grow money tax-free. A traditional 401k or IRA contribution reduces your taxable income now. If you're in the 22% tax bracket and contribute $6,000 to an IRA, you save $1,320 in taxes immediately. The money grows tax-deferred until retirement. An HSA, health savings account, is triple tax-advantaged. Contributions are deductible. Growth is tax-free. Withdrawals for medical expenses are tax-free. It's the closest thing to a perfect tax vehicle available to ordinary people. The rich hide wealth in trusts and foundations and complex offshore structures. You can't do that. But you can hide wealth, legally, in retirement and health accounts. It's the same principle. Keep your money working and growing before the IRS touches it. Just scaled to what's accessible to non-millionaires. Third, understand the fundamental difference between ordinary income and capital gains. Wages are taxed at ordinary rates, up to 37% federal, plus state and local, plus payroll taxes. Long-term capital gains, profits on assets held over a year, are taxed at 0, 15, or 20% depending on income, with no payroll taxes. That means every dollar you earn from investing and holding for over a year pays roughly half the tax or less than every dollar you earn from working. That's not fair. That's not based on effort or value created. That's just the structure of the code. Labor is taxed heavily. Capital is taxed lightly. You can't change that. But you can make it work for you, even a little. Even if you can only invest $50 or $100 a month. Even if it takes years to build meaningful wealth. The principle is the same. Money earned from investments is taxed less than money earned from work. So earn some money from investments, even small amounts, to benefit from that preferential treatment. Fourth, if you own a home or are considering buying one, understand that it's one of the few tax-advantaged assets available to regular people. Mortgage interest is deductible up to certain limits. Property taxes are deductible up to $10,000. When you sell your primary residence, up to $250,000 in gains, $500,000 for married couples, is tax-free if you've lived there 2 of the last 5 years. That's not available to renters. Renters pay with after-tax dollars and get no tax benefit. Homeowners get multiple tax advantages. That's part of why wealth compounds faster for homeowners. Not just appreciation, but tax treatment. Fifth, understand timing. In some cases, you can control when you realize income or take deductions. If you're expecting a bonus, sometimes you can defer it to next year, if next year you'll be in a lower bracket. If you're planning a major deductible expense, sometimes you can time it to maximize the benefit. The wealthy do this constantly, harvesting losses, deferring gains, timing income, bunching deductions. You can do smaller-scale versions of the same strategies. Sixth, keep immaculate records. The difference between a legitimate deduction and an audit problem is often just documentation. If you have business income, track every expense, keep receipts, use software or apps, maintain a mileage log, document everything. The IRS is more likely to audit lower and middle income people with EITC claims than wealthy people with complex returns, partly because it's easier and cheaper. Don't give them easy reasons to question your return. Document everything. Be able to prove every deduction. Seventh, consider working with a tax professional at least once to understand your situation. Not just to file your return, but to actually analyze your tax situation and identify opportunities. A good CPA or enrolled agent can often find deductions and strategies that save more than their fee costs. TurboTax is fine for simple returns. But if you have any complexity, side income, investments, rental property, multi-state situations, a professional can often add significant value. The wealthy don't use TurboTax. There's a reason. Now, if you're thinking, this sounds like a lot of work, or I don't have time to start a side business just for tax deductions, or I can barely save anything, I can't maximize retirement accounts, you're right. It is work. It does take time. It is harder when you're living paycheck to paycheck with no cushion. And that's part of the trap, too. The system is designed to be complex enough that navigating it requires time, energy, and often money that working people don't have. While the wealthy have teams of professionals handling this for them, you're supposed to figure it out yourself while working full-time and managing all of life's other demands. That's not an accident. That's friction. Friction that protects the advantages of people who can afford to pay for help while burdening people who can't. But even understanding the basics, even implementing one or two small strategies, even just being aware of what's possible, that's better than blindly accepting whatever happens to you. The goal isn't to pay zero tax like billionaires. The goal is to stop bleeding unnecessarily. To use the legal tools available to you, even if they're smaller and fewer than the tools available to the wealthy. To stop paying more than you legally owe just because you don't know what's allowed. You don't need a private jet to play smarter. You just need information. And the willingness to use it. And if you've ever wondered why none of this is taught in school, why you learned algebra and history but never learned how the tax code works or how the wealthy use it, it's because the system depends on most people not knowing. It depends on you working, earning wages, paying taxes automatically, and never questioning whether there's a better way. Never understanding that the rules are different for different people. Never realizing how much of what you pay is optional for others. If everyone understood how the tax code actually works, if everyone saw clearly who benefits and who pays, and how deliberately the system was designed this way, there would be pressure for change. Pressure to make it more fair. Pressure to close the loopholes that only the wealthy can use. Pressure to tax wealth like wages instead of giving it preferential treatment. But as long as most people think that's just how it is, or rich people are just smarter with money, or I just need to work harder, nothing changes. The system runs smoothly. The wealth transfer continues. The gap widens. The system depends on one thing above all. Most people never realizing how much more they could keep if they knew how it worked. Most people never questioning why they pay so much while billionaires pay so little. Most people accepting complexity as neutral instead of seeing it as protection for the wealthy. Comment: it's not broken, it's built this way. If that sentence explains everything you've been feeling about taxes and money and the economy, because that one sentence is the key to understanding not just taxes, but how modern capitalism actually functions. Let's be absolutely clear. This isn't about hating the rich. This isn't about resenting success or punishing achievement or demanding that everyone be equal regardless of effort. This is about understanding that the gap between them and you isn't just income or wealth. It's information. It's access. It's structure. It's the fact that they have teams of advisors whose entire job is to minimize their tax burden legally, while you have a form and a deadline and maybe TurboTax if you're lucky. That's not a moral difference. That's not because they work harder or are smarter or deserve it more. That's an informational and structural advantage built into the system. And it's not illegal for them to use these strategies. It's not immoral for them to pay less tax when the law allows it. The problem isn't individual rich people playing by the rules they've been given. The problem is the rules themselves. The fact that the rules are different based on how you earn money. The fact that the complexity protects advantages that only the wealthy can access. The tax code is thousands of pages long. It's incomprehensible to most people. And that incomprehensibility is functional. It serves a purpose. It makes it nearly impossible for ordinary people to see clearly how the system works and who it benefits. But it's not illegal, just unequal and unsustainable and designed. You don't need to cheat the system. You don't need to do anything illegal or shady or fraudulent. You just need to stop playing completely blind. Track where your money goes. Know your effective tax rate. Not just your bracket, but what percentage of your total income actually goes to federal, state, and payroll taxes. Most people don't know this number. Calculate it. It's sobering. Understand what bracket you're in and how much of your income falls into each bracket. The US has a progressive tax system where different chunks of income are taxed at different rates. Understanding that helps you see which additional income is most expensive and which deductions are most valuable. Learn what deductions you're eligible for. Standard deduction versus itemized. Above-the-line deductions versus itemized deductions. Business expenses. If you have any self-employment income, it's not exciting, but it's worth thousands of dollars. Use every legal advantage available to you, no matter how small. Contribute to retirement accounts if you can. Use an HSA if you have a qualifying health plan. Take the home office deduction if you legitimately work from home for a business. Track business mileage. Document expenses. None of this will make you rich. None of this will let you pay zero tax, but it will let you keep more of what you earn, legally, ethically, simply by understanding and using the tools that exist. And most importantly, talk about it. Share what you learn. Ask friends what strategies they use. Compare notes on deductions and accounts and approaches. The less people talk about money and taxes, the easier it is to keep the system quiet. The easier it is to keep advantages hidden. The easier it is to maintain the information gap that benefits the wealthy. But the moment people start comparing notes, the moment everyone starts asking, wait, how much do you pay compared to what you make? The trap becomes visible. The inequality becomes undeniable. The system becomes transparent. And visible traps are weaker than invisible ones. Systems that everyone can see clearly are harder to maintain than systems hidden behind complexity and silence. They told you to pay your fair share. They told you the tax system was progressive and fair. They told you that if you work hard and play by the rules, you'll get ahead. But the truth is simpler and harder. They don't work harder than you. They work differently. They structure differently. They earn differently. They build systems that pay them. You are part of the system that pays them. They earn from capital, which is taxed lightly. You earn from labor, which is taxed heavily. They have access to strategies and structures that reduce or defer or eliminate tax. You have W-2 withholding that takes your tax before you even see the money. They have teams of professionals optimizing every detail. You have a form and a deadline, and the hope you don't make a mistake. That's the gap. Not effort, not intelligence, not morality. Structure and information. And once you understand that, really understand it, see it clearly, recognize that it's designed this way, you can start making different choices. Small moves toward ownership instead of just wages, toward structure instead of just earning, toward using the legal tools that exist instead of just accepting whatever happens to you. Because the tax trap only works when you don't see it. When you think it's fair, and you're just not good enough at it. When you blame yourself for paying more than billionaires, instead of blaming a system deliberately designed to produce that outcome. Now you see it. Now you understand how it works. Now you know that it's not broken. It's built this way. Drop your story in the comments. Have you ever actually calculated your effective tax rate and compared it to what you see billionaires paying in the news? Have you ever added up federal, state, and payroll taxes and realized you're paying 30 or 35% while reading that someone worth billions paid 3%? How much do you think you pay in total taxes compared to what wealthy people in your city or your company or your industry actually pay? Not what they should pay. Not what's fair. What they actually pay under the current rules. The more people answer that question honestly, the more people share real numbers instead of vague feelings, the faster the illusion starts to break. The faster the gap becomes undeniable. The faster the pressure builds for change. Because right now, the system runs on your belief that it's basically fair, or that you just don't understand it, or that if you worked harder, you'd benefit too. It runs on isolation and silence and complexity that keeps everyone from seeing the full picture. But when enough people see it clearly and talk about it openly, when the collective experience becomes undeniable, when millions of voices say, this isn't fair and this isn't sustainable, that's when systems start to crack. That's when change becomes possible. They told you to play by the rules, work hard, pay your taxes, do your part. They just forgot to mention that they wrote the rules for themselves. That the game was designed to tax your labor heavily and their wealth lightly. That complexity is protection, and information is power, and structure is advantage. You've been playing by rules you were never taught, in a game designed for you to lose, against opponents with strategies you didn't know existed. But now you know. Now you see it. Now you understand that your tax burden isn't just math, it's policy, design, choice, a system built deliberately to favor wealth over wages, capital over labor, assets over income. And seeing it clearly is the first step to navigating it better, to using what's available to you, to stopping the bleeding, even if you can't fix the whole system alone. The tax trap is real. It's massive. It's been built over decades by people who benefit from it. And it's costing you thousands or tens of thousands every year in ways you probably don't even fully see. But the trap only stays locked when you don't understand it. When you think it's fair. When you blame yourself instead of the structure. Now you understand. Now you see who benefits and who pays and how deliberately it was designed. Now you can start making choices with that knowledge instead of just accepting whatever the system does to you. They built the rules for themselves, but you don't have to keep playing blind. The cycle breaks when enough people see clearly and speak honestly. Now you do.